And thanks a lot for joining me here today. I appreciate very much for your tuning in. A lot to go through today, including some important China-related stories. And our discussion today starts off with the Chinese Communist Party is intensifying its national security law. And this is important because it's coming at a time when foreign businesses are already concerned that they could be punished for regular business activities. Now, let me explain. For the first time since 2010, China's lawmakers revised and widened its law on guarding state secrets. Now, the law published online expands what restricted sensitive information is classified as, and now it includes work secrets. The update requires this information, even if it's not a state secret, to be protected. And there will be adverse effects if it's leaked. It said rules on specific management of work secrets could be released on a later unspecified date. Now, foreign investors are criticizing this rule, describing the provision as vague, and said Beijing needs to clearly define and limit the scope of so-called work secrets. The new law, by the way, takes effect on May 1st. And the Biden administration is cracking down on U.S. data being shared with what it's calling countries of concern, of course, and that includes China and Russia. The administration unveiled a new executive order that aims to protect Americans' personal data. Right now, buying data through data brokers is legal in the U.S., and the administration is trying to fill this national security gap. Now, the order will curb data brokers and others from bulk transferring Americans' data, including geolocation, health, financial, and more information to specific countries of concern, which includes Russia, China, Iran, North Korea, and Venezuela. So officials said that data brokers who know the information will end up in these countries will be banned. Certain types of data, including corporate payroll and compliance, are exempt. Cloud service, employment, and investment agreements would also be allowed, but are subject to security requirements. And besides that, this is also something pretty important that's happening. China's electric vehicle giant, BYD, is charging up its lineup in a brutal price war by releasing bigger discounts on its newly released models. And let me just mention some of them here. The Hans and the Tang models are seeing prices up to 14% lower than their previous versions, based on Reuters calculations. The Hans sedan comes in plug-in or pure EV, and the Tang is a hybrid SUV. These are even bigger discounts than the year before. So this is in addition to unveiling two other vehicles last week that are starting at lower prices. EV demand in the world's largest auto market is stalling as sales fell nearly 40% in January from the previous month. And speaking of price cuts, major Chinese third-party retailers, JD.com, Tmall, and Pinduoduo, are battling for customers by offering more steep discounts on Apple's iPhone 15s, just 5 months after launch. And this is as the U.S. tech company suffers slowing sales in China. And the largest round of discounting comes after online retailers in October offered similar substantial discounts, and third-party retailers are also offering discounts of as much as 10% on Apple's iPhone 14 Pro. The retailers have been engaged in a value for money battle as consumers tighten their belts in a slowing economy. And now onto markets. U.S. stocks closed lower on Wednesday, a day ahead of a key inflation reading that could heavily shape expectations for the timing of an interest rate cut from the Federal Reserve. Here's a quick recap of markets.
The Personal Consumption Expenditures Price Index, the Fed's preferred inflation gauge, is expected to show prices ticked 0.3% higher on a monthly basis in January. The Dow finished Wednesday off about 0.1%. The S&P 500 slipped 0.2, and the Nasdaq fell about 0.5%. The down day occurred after a lengthy rally peaked last week on enthusiasm around the potential for artificial intelligence after NVIDIA reported quarterly earnings. Adam Phillips, managing director of investments at EP Wealth Advisors, said he thinks stocks are due for a pullback.
Over the short term, I would say we are still pretty cautious on the market. We are trying to remind our clients that The gains that we've seen since late October, more than 20% for the S&P 500, and really same thing for the equal weighted index. If you just neutralize the impact of technology stocks, it's really represented more than a year's worth of gains.
Stocks on the move included United Healthcare, which lost 3%. It was the biggest drag on the Dow and one of the largest on the S&P 500 after a report on Tuesday said the U.S. Department of Justice had launched an antitrust investigation into the healthcare conglomerate. And dating app Bumble plunged 15%, trading near an all-time low after giving a weak first quarter outlook.
Democratic and Republican leaders in the U.S. Congress yesterday announced they had reached a deal for advancing the 12 annual bills that fund an array of federal programs for the fiscal year ending on September 30th and could also avert government shutdowns on Saturday. Let's take a look at the details.
Congressional leaders say they've struck a deal Wednesday to avert a partial government shutdown by the end of the week. That would pave the way for votes on a stopgap bill to keep the lights on in the government through until mid-March. The temporary measure will be voted on by the House and Senate this week. That's according to a joint statement by House Speaker Mike Johnson, Senate and House leaders, and the leaders of the two chambers' appropriations panels. They say they agree to advance 6 of 12 annual bills by March 8th and the rest on March 22nd, giving lawmakers time to examine and debate the full-year funding bills. Republican Representative Kevin Hern told reporters the temporary funding bill would be put to a House vote on Thursday. It would be the fourth such measure in the fiscal year that began last October 1st. Lawmakers disagree on funding and aid to U.S. allies, with hardline Republicans wanting to see more spending cuts. Both parties now have to convince their ranks to back the stopgap deal. But if voting fails, it would bring the federal government to the brink of partial shutdowns on Saturday.
And Boeing has been given a short runway to work on a plan to fix serious quality and safety issues with its jets. The company must develop a comprehensive plan to address systemic quality control issues within 90 days. Here's more.
Boeing just got set a tough deadline. The Federal Aviation Administration says the plane maker has 90 days to deliver a plan on how it will fix what it calls systemic quality control issues. That follows the mid-air blowout earlier this year on a 737 MAX jet operated by Alaska Airlines. No one was seriously hurt in the incident, but it revived concerns over how well Boeing's top-selling plane is made. The FAA has already capped production rates for the jet, and the firm's operations are being closely examined by customers and lawmakers. Now the aviation watchdog says Boeing must take steps to create a measurable systemic shift in quality control. It says any actions must incorporate the findings of an expert panel report that was released this week. That found that the firm had inadequate and confusing processes for promoting safety standards. The new incident is Boeing's second major crisis in recent years. It comes after 2 fatal crashes led to the MAX jets being grounded for 20 months. Those accidents were traced to a design flaw that has subsequently been fixed. The new problems play into the hands of arch-rival Airbus. Reuters has reported that United Airlines could place a massive order with the European firm to replace MAX jets it had ordered from Boeing. Other airlines, including Ryanair, have said they expect delays in the delivery of new planes from the US giant as a result of the turmoil.
In the last year, home insurance premiums have skyrocketed. In some cases, those monthly costs have risen by as much as 40%. Here's a look at what's causing the price hike and what homeowners can do to try to save money.
When disaster strikes, home insurance is there to help cover some of the costs.
Your home is one of your largest assets, and in the insurance industry, it's wise and prudent to protect that asset.
But the price of that protection is becoming more expensive. Home insurance broker Travis Hodges says he's seeing an average increase of 27% year over year. And in some cases, the cost of insuring your home can go even higher.
We've heard as much as 40.
So what's causing the price hike? Hodges says there are a few reasons. 1. Changing weather patterns and events, such as tornadoes and wildfires. 2. The cost of materials has gone up, so it costs more to fix any damage. 3. Property values have risen. Let's look at those numbers for a moment. In January, the median home sale price was $379,100, according to the National Association of Realtors. That's 5.1% higher than January of last year, and it's the 7th month in a row home prices have gone up.
Everything else has gone up. Insurance has just mirrored that and been proportionate.
So what can you do to save money? If you're willing to increase your deductible by as much as $500, Hodges says you can save anywhere from 15 to 20% and shop around for different policies.
We actually do that proactively for our clients. Every time there's a renewal, we let them know what other options are out there.
And remember, flood insurance is a separate plan.
A former crypto tycoon convicted of billions in fraud is facing a 100 years behind bars, which his lawyer is calling barbaric. Prosecutors say FTX founder Sam Bankman-Fried cheated investors and customers of at least $10 billion. They say trial evidence supports their recommendation of a 100-year prison sentence. Bankman-Fried's lawyer is pushing back, though, saying his client is a first-time non-violent offender. He's making a last-ditch effort for a reduced sentence, arguing a proper sentence would call for 5 to 6 years in prison. A judge is set to sentence Bankman-Fried next month. And Apple seems like has canceled work on its electric car, according to a source familiar with the matter. This comes after a decade of the iPhone maker starting the project of making a fully autonomous vehicle that could rival Tesla. NTD's Shar Marshall has more.
Apple made the disclosure internally Tuesday to end their 10-year-long voyage into making an electric vehicle. The vehicle was never publicly announced, but so much was invested that there was also a division and building made so Apple workers could take remote control of the vehicle.
Well, I've always said that the auto industry is forced into a corner. It's either billions of dollars in fines from the EPA and every other three-letter agency, or millions of dollars in losses. So they had to pick the worst of two evils. They took the millions of dollars in losses on each vehicle. And in some cases, it's $20,000, $30,000 per vehicle.
Surprisingly, there was nearly 2,000 employees working on the project, according to Bloomberg sources who asked not to be identified. Several employees working on the electric car project will be shifted to the firm's artificial intelligence division.
The declining EV market is something that we're starting to see even more and more. And I called this out a long time ago, that you're going to get your early adapters who signed on to it right away, took that $7,500 tax credit, those state credits. Well, now a lot of those state credits have gone away. And as of 2024, we only have 12 vehicles that meet the $7,500 tax credit. And without those incentives, you can see right away that electric vehicle sales barely exist.
Shares of the company were up 0.7% in afternoon trading after some losses from earlier in the trading day. Fix mentioned the overall effects the automotive industry can have on the stock market.
Car manufacturers are in a loss position on a continual basis. It will impact the stock market because half of the Dow Jones is impacted by either the car manufacturer or some sub-brand of that. Think of it, tires. Even NVIDIA makes screens for all these electric cars. So if you start thinking about the fact that if it affects everyone across the board, that could cause a negative downturn in the stock market.
It's software that allows users to use their iPhones while driving through a car's built-in display, controls, and voice control. It's also in a section of the market with a position of less competition. Sean Marshall, NTD News.
Meanwhile, shares for Beyond Meat soared after it announced that it would increase prices and cut costs this year. Shares rose 75% in extended trade. The company, which supplies plant-based meat patties to fast food chains like McDonald's, plans to raise the prices in the second quarter on some of its products to restore margins. In the past, Beyond Meat lowered prices to attract customers from traditional meat to faux meat. It now expects gross margins in the mid to high teens compared to a negative 24% margin in 2023. The company also said it's going to steeply cut costs after topping market expectations for quarterly revenue. And drivers in the market for a new ride could finally get some relief as car inventory has gone up and prices have come down. Data shows the average cost of a new vehicle in January fell 1.2% from a year earlier. Used car prices dropped more than that. Prices spiked in 2020 during the pandemic, mostly because of a shortage of chips for new cars, which surged demand for used cars. Cox Automotive reports that American dealerships had more than 2.6 million new cars, trucks, and SUVs on their lots in January. Now, compare that to just 1.7 million a year prior. Even though that's a fraction of pre-pandemic numbers, analysts and dealers are predicting this will be the most affordable year in the past 5 for a new car or a new truck, and there will be as well new discounts and incentives for buyers. And Odysseus, the first U.S. spacecraft to land on the moon in half a century, neared a mission-ending slumber on Wednesday, 6 days after a lopsided touchdown that hindered its operation. Though NASA and the company behind the vehicle cheered its performance as a success. Here's more.
For the first time in 50 years, a U.S.-made spacecraft touching down on the moon. The company behind Odie says these images released Tuesday are the closest observations of the area. It's of high scientific interest because it may have ice that in the future could be used for water fuel.
This is a gigantic accomplishment.
NASA, the main financial backer of the Odysseus mission, plans to send a crewed mission to the moon's south pole as early as September 2026 as part of the agency's Artemis missions. The goal, to establish a human base on the moon and eventually use what is learned to take the next giant leap, sending astronauts to Mars. On Earth, NASA is already preparing for human exploration of the red planet.
We already, send things to Mars, right? So a real complication with Mars is the human component.
A 4-person crew is currently living and working inside a 1,700 square foot habitat, simulating physical and mental challenges of a Mars mission.
Being away from family and friends for an extended period of time, living in a small space with other individuals for an extended period of time.
This research, combined with other work on the International Space Station and future lunar missions, will
tell us a piece of the puzzle that we can integrate and to help understand these challenges, as well as test countermeasures.
And Apple plans to disclose more about its plans to put generative artificial intelligence to use later this year. Chief Executive Officer Tim Cook said during the company's annual shareholder meeting on Wednesday. Take a look at this.
Apple has been under fire from investors for seeming to go slow on AI. Critics say the iPhone maker is lagging rivals like Microsoft and Google, which are using the tech in their products. Now, Apple boss Tim Cook wants to challenge that idea. On Wednesday, he said his firm was hard at work on the tech and investing significantly. He says it will unlock transformative opportunities for users. Cook also said Apple laptops powered by its in-house chips were better suited to AI than any rival. But he wasn't ready to give many more details. Cook said Apple would disclose its plans later this year. On Wednesday, shareholders rejected a measure put forward by unions requiring the company to reveal how it uses AI. Apple had rejected the proposal, saying that would tip its hand on strategy. A similar motion will be heard at Walt Disney's annual meeting in April.
People attending a Willy Wonka-inspired family-friendly event were horrified when they showed up to the event being canceled with no warning and instead were led into a nearly empty warehouse with an AI-printed background, cheap props, and almost no candy. Here's NTD Sean Marshall with more on the story.
Families attending a Willy Wonka-inspired event in Glasgow, Scotland were promised optical marvels and extraordinary props for a £35 or $44 ticket. People there became so angry on Saturday that the police were called. Police Scotland confirmed to CNN the event was cancelled and the story went viral on social media. Videos posted on social media showed a figure in a cloak and mask emerging from behind a mirror, with children watching on, sounding increasingly horrified. Almost every child who saw him ran off crying, attendee Jack Proctor said. A Facebook group with over 2,000 followers was created to speak about the scam. Jenny Fogarty, an actor at the event, said, "I noticed that the costumes we were given, all of them were female, and we were given the sexy version as opposed to the traditional ones." Fogarty wrote on Facebook group House of Illuminati Scam, "Some people had t-shirts underneath to give it a bit more modesty. I just had a lacy t-shirt underneath." We mailed the House of Illuminati for comment, but we received no answer. Apparently, people instead are attacking event staff on social media as mentioned on the Facebook page, as opposed to being able to contact the event's organizer. Sean Marshall, NTD News.
And Bitcoin is headed for its biggest monthly gain in more than 3 years today and is within range of a record high as cash rushing to listed Bitcoin funds propels a strong rally. Here's more.
Bitcoin is back on a tear. Frenzied trading has the top cryptocurrency on track for its best month in more than 3 years. By Thursday afternoon in Asia, Bitcoin was trading at around $63,000, having gone even higher overnight. It's up close to 50% this month, its strongest performance since December 2020. Now some traders say it looks set to test the record high of about $69,000 set in late 2021. Bitcoin has been boosted by the launch of exchange-traded funds featuring the currency. That has helped to draw in a new class of investors. It also reignited excitement that had been sapped by the so-called crypto winter, when prices collapsed. Investors have also been buying in ahead of April's halving event. That's a process that takes place every 4 years, whereby the rate at which new tokens are released is cut in half, making them harder to get. The prospect of US rate cuts has also put investors back in the mood for more speculative bets. Major exchange Coinbase Global says trading volumes have surged as a result of such factors.
That's all the stories we have for today's NTD Business. And by the way, if you have any thoughts, feedback, or comments, please feel free to leave them down below. I read them for every episode, and I do enjoy seeing them, so please don't hesitate to do so. Thank you very much, and we'll see you soon.